Let me start this video with 3 alarming facts. Fact number 1, general inflation and lifestyle inflation has an even more sinister partner, and that is medical inflation. The second is that one unforeseen medical expense can derail your financial plan by years. And the third is that these medical costs are equal opportunity impactor. It doesn't matter if you are on fire path, if you're on a high up on the corporate ladder, you're retired, you're working overseas, you're working locally, you're working in India, doesn't matter. It will impact everybody. So let's find ways in which we can overcome these medical or healthcare challenges. Hi everyone, welcome to our channel. One of the most common questions that we get on our channel is about healthcare costs, that how Seema and we are managing our health as well as healthcare costs, knowing that we are living in different parts of the world or we've lived in different parts of the world, and how others can also probably learn from our experience on that. So in this video, I will try and give you an insight on our journey of healthcare and how we are planning towards our own retirement healthcare plans, how to understand the healthcare before understanding insurance itself, and some of the considerations you should have if you're on this journey to financial independence and planning to retire early or even retire at a later age. So hopefully by the end of the video, it'll give you some new ideas, insights, and tips to overcome these challenges. But more importantly, it will also help us to learn from you. So let me first start with understanding, or at least helping understand, the healthcare system itself, because one of the mistakes we do, and at least that is what we did, is we straight away start going on to sites like Go Compare, Policy Bazaar, etc., to just compare insurance plans and start seeing the premiums, etc. But before you do that, it is very important to understand typically what kind of medical issues do we have during our lifetime, the frequency of those issues, and the impact that it has on our life. It typically starts with a routine checkup. We go to a doctor for some flu shots or just if we have a stomach ache, etc. The frequency of this is quite high because we do these checkups every few weeks or a month or etc., just visiting our local doctor, etc. And the financial cost of these routine checkups is fairly low. Even if you're traveling abroad somewhere, if you go to a local doctor, if you just want to do a routine checkup, it doesn't cost a fortune. It will not leave a dent in your wallet. Then based on the routine checkup, the next step is that generally during the routine checkup, the doctor may say, hey, you have to see a specialist because of XYZ reason, or we directly go to a specialist. A specialist could even be going to a dentist for some root canal treatment or something like that, or even a physiotherapist. Again, the frequency of this is, I would say, medium to high, that we have these frequency of these specialists every few months during a year that we do visit. It could be even a dentist or a physiotherapist, as I said. And the cost of these is generally, I would say, low to medium. That yes, it's not as cheap as just going to a local doctor, but it is not as expensive as just seeing a surgeon for that matter. And when you are having these specialist checkups or consultations, you end up having certain tests and some scans, and you have some medicines, etc. The frequency of this, I would say, is medium. It's not high. You probably get it every once a quarter or maybe once a 6 months that you need those scans. And the cost of this, I would say, is around, again, medium, that it's not as cheap, and these checkups or these scans are becoming more and more expensive, especially these PET and these specialist scans and these medicines that you need. Based on those scans, based on those specialist discussions, you may end up needing certain minor surgeries. And minor surgeries are that you don't need to be hospitalized. You just go to the doctor and within an hour or a few hours, you get that surgery done. For example, just a few weeks back, I got a root canal treatment done, and that's kind of a minor surgery when it comes to dental. Or it could be that you have a fracture and you have a plaster. That also, I would put it like a minor surgery that you go to a specialist for that. Again, for that, the frequency of this is, I hope it is low to medium, that you don't get these minor surgeries done every quarter. It's probably once a year that you have a requirement for these surgeries. And from a cost perspective, I would again put it medium. Yes, it's expensive, but it is something that is not exorbitant, that you again have certain options that you can look out for. Then comes the next level of stage, is that you end up with probably an elective surgery, that those minor surgeries is not what is the doctor recommends, or it is not even that a minor surgery is fixed, that you need a bigger surgery. And bigger surgery or elective surgery means that you're needing to be hospitalized, and you need to be there at the hospital for a few days or a week, etc., to recover from that surgery. This could be even elective surgery, like when you get older, a joint replacement, which is even a few weeks or a month, including physiotherapy, etc. Or it could be an elective surgery of something smaller that just requires an overnight stay at the hospital. The frequency is typically low, and these elective surgeries are from a financially impacting high, that they cost a lot of money, depending on the surgery, depending on it. So I would even say not maybe high, but medium to high, that you have that cost for that. The other thing that also happens is it may not be that we have a surgery, but we have some disease. It could be some minor disease that you have, or it could be something even more severe and consequential on life, when you get diabetes or hypertension, or even some cardiac problems in future as you grow older. Again, on those diseases front, I would put the frequency as low, that probably we had measles and the other diseases when we were children. If you leave COVID aside for a moment, then during even the working years, we have less of these diseases, except few flus, hopefully not. But yes, the cost could be expensive over a period of time, even if it is not that it's a one-time cost. And then comes the other one, which is the major surgery. And major surgery is that needs a lot more lifestyle changes. It has a life-changing impact on us. For example, a heart surgery, or some major a transplant, organ transplant that may need, or a kidney or a dialysis or something like that. Those are consequential surgeries that we have in life. Typically, these are the probability or the frequency of this, hopefully for everybody of us, is low, that it's probably once in few decades, or even that once in lifetime, that we go through those major surgeries. We don't need to go through it every decade also, or every few decades. But the financial impact of these is enormous. And so I would put it's really high, that those impact on those major surgeries. And then if you plan to have a family, you plan to start a family, I would even put childbirth, pregnancy and childbirth as part of the healthcare. It is, and it may need that it's a natural birth or a cesarean, etc. Again, the frequency of this is low, that you may have a few children during your lifetime, and then the cost of this is still high, that you will probably be paying for those, at least the pre and the post natal care, that if you combine all those costs. And then the two categories, which are, I would say, very impactful on life, which is the emergency categories, where the first one is that you have an accident. Unfortunately, someone, let's say, has a car accident, and that is a life-changing event, and it needs immediate attention then and there. Hopefully, the frequency is nil to low, that it only happens once in a lifetime, and I hope it doesn't even happen once in a lifetime for all of us. But the cost of this, financial impact of this, could be extremely high, because this could be cost of ambulance, maybe even airlifting. You could be in a very expensive place on a travel that this happens, that it could even quadruple your costs, because these are the things that are not in our control. And likewise, the last one is that there is an immediate emergency hospitalization needed because of some critical illness that you have, and you have and that I would say is something like stroke or a heart attack that needs immediate attention. Again, I really hope that the frequency of this is nil to low, that people don't go through this, or don't ever go through this, except maybe once in a lifetime at max, and because these are life-changing events. But again, the cost or the financial impact of this is enormous and extremely high. So if you look at this chart, then you can really plot that from very simple routine checkup to a very complex and an emergency situation like hospitalization due to heart attack or an accident, that this is what we overall go through during our lifetime. And the frequency of this is very different, as well as the cost of each one is very different. What we try and do is when we go to those sites like Policy Bazaar or Go Compare or any other sites where we are comparing insurances, we typically compare insurances without having this knowledge of the probability, frequency, or the impact of cost. So let's look at the insurance companies, that how does this fare when it comes to insurance companies. So if you look at the first few categories, from the routine checkups to the minor surgeries, this is what the insurance companies would call outpatient treatments. That you don't need to be hospitalized, but there is a treatment that is needed. The ones that are below that, those are the inpatient treatments, and those are the ones that are the core part of an insurance policy, what we buy. And the last two, I would even put it as a special category, though they are inpatient treatment. Those are emergency, even travel insurances are needed, because you never know when you may have those issues, in which part of the world and what part of your life. So for these outpatient treatments, generally the insurance companies either exclude it from an insurance policy, or even if they are included, then there is a cap or a maximum amount to which you can claim every year for these treatments. Or it could be that there is a certain amount of your own contribution that you have to make the way you take the policy. The second one is the inpatient treatment. That is where you have to really focus, or that's also where, which is the core part of the insurance policy. And that is where you have to really see the type of the room that you get, the type of the cover you get, the additional cover that you may get on top of your surgery, so the non-medical expenses that you can cover. And the third part is that you have a special insurance, that is your travel insurance, that in case of there is a medical emergency, that those particular insurances give you the possibility for even ambulances being airlifted or even evacuated, so that they can repatriate you to your home country where you took your insurance from. So this is how you have to see all these insurances, all these components, how the insurance companies view these. So now for folks like us who have either worked in different parts of the world, or have the ambition of retiring in another part of the world or another city in the same country, or traveling frequently, even during your working years or after your working years, it becomes very important to understand how do you combine all this. The simplest is that you combine everything and you put a big insurance for everything. What it'll do is it'll put a very high premium that you'll be paying. But that's where you have to understand and see that, do you want to pay a high premium for everything based on how I explained the probability and their cost impact, versus paying something which is much more, with no pun intended, surgical in terms of how you treat your insurance plans. So I'll give you an insight onto how we are going about doing our insurance planning, or how we've done it in the past and how we are planning to do it in the future during our retirement years now. Again, it could be a wrong approach, it could be a right approach, we don't know. And hopefully through this video, we can also validate our planning, that is it the right or the wrong, or are there things that we should tweak. So if I explain how we do it, so for the outpatient part, we have not taken any insurance cover. The reason we've decided that we don't need a cover is because we think that the cost of these outpatient treatments is limited, or at least lower than what it would have a big impact on our budget. And the second is, whenever you do increase it or include it, it hikes up the premium, as I mentioned. So what we are doing for this outpatient treatments, or these first few lines, is that we are budgeting as part of our expenses. So every year, as part of our expenses, we have a budget allocated, that this is what we will be expecting towards our daily routine check, or our routine checkups or scans and tests, etc. So for example, this year I've had the root canal treatment. I've had some insoles made for my feet, because I had plantar fasciitis. I always find it difficult to say that because of all the hiking, etc. Seema had certain scans. So all this is kind of already raking up our budget. In case we do spend more than what we budgeted in our expenses, we will try and squeeze in some other expenses that we have as our flexible expenses, or the in our budget, be it travel, shopping, entertainment, etc., so that we can still remain within our expenses. And because of whatever reason, if we exceed that and it will have an impact on our expenses, we even have an emergency fund which we will tap into and we will use that to balance out that expenses for that particular year. So this is how we are doing about the outpatient healthcare part of our planning. Then when it comes to inpatient healthcare, this is where we've double insured ourselves. So for outpatient, we've got no insurance, but for inpatient, we've got double insurance. So we've taken a medical insurance or health insurance in Thailand, and we've got our health insurance in India. In Thailand, it covers us to approximately around $130,000 per person. So it's around 1 CR for Seema and 1 CR for myself. And in India, we've got 50 lakhs for Seema and 50 lakhs for me. So around 1 CR, that is our cover in India. It gives us the choice that we see that what are the treatments that are available in Thailand, which are not just maybe financially good, but from a medical perspective are good for us, versus what are the treatments based in India. And we can compare and we can see where we probably may or want to do that. The second is that we spend considerable time both in India and in Thailand, so it makes logical sense that we have insurances there rather than having an international insurance. We've decided to have a local insurance in both the companies. When we looked at the international insurance packages, there are many companies like Aetna, etc., that give you these international cover. We realized that the premium is much more, so we are able to manage the premium while we get the best quality insurance in both these countries. And the insurance companies also have tie-ups with the hospitals that it allows us to be cashless in case we need to avail those insurances. And then coming to the last two rows, which is the emergency part, that in case we do have an accident or we end up with an emergency hospitalization, I hope it doesn't happen. For this, especially because we are traveling a lot and we are traveling a lot to expensive countries many times, like US, Singapore, etc., we've taken the top of the top travel insurance for the duration in which we are traveling. So we are doing these per trip insurance, but for those per trip insurance, we've taken the top tier. So that top tier enables us to have those emergency cost covered. Not just that, it also covers any repatriation cost that is needed, not just for us, but for family, if the family needs to be there with us. So this is how we've taken each bucket separately, and we planned insurances separately for that. And we realized that planning it separately, tactically for the emergency insurance, long time strategically for inpatient insurance, and not getting any cover for outpatient, we realized that this has been better financially for us compared to having a global insurance or having an insurance that covers everything at the all the time. Would love to hear from you what your experience is from these insurances. But here are some considerations that I would definitely suggest you to do, because this is again something which we did during our path to financial independence, during our corporate years, as well as during our retirement years right now. So the first one is, don't just rely on your corporate insurance. Make sure that you build your own private insurance. And the reason is, the day, I hope it doesn't happen, but if unforeseen circumstances or unfortunately that you get laid off, you have a double whammy, that you not only lose your job, but you may even lose your insurance. That is the reason that it is better to have your own insurance, for not just for you and for your family. The second benefit it does is that it starts helping you build a track record with another insurance company. Because if you decide to get retired, and then after that your corporate insurance expires, you take a new insurance, even sometimes with the same insurance company, you have to reset your preconditions or your waiting period for at least 2 to 3 years, and that can have an impact in future. And it can even have a higher premium. And the third is that it helps you build a track record with that insurance company, so that in future, if you have a no-claim bonus for years and years, then it helps you to get these papers processed faster, rather than taking an insurance and 6 months later claiming it. They will always see you with those skeptical eyes. And by the way, needless to say, I hope that everybody of you are at least covered for those inpatient insurance, either through corporate or private, for you and your family. If you've not, please stop watching this video, and that's the first thing you should do, is go and get an insurance if you've not covered so far yourself. Um, the next point is that when it comes to retirement planning, make sure that your withdrawal rate, your expenses, target expenses that you have for future also counts for the insurance premiums that you are going to pay in future. Because what happens is that during our corporate years, most of the time, our company we are working for is paying for insurance, or at least paying for a part of that insurance. So it gives us a false sense of security in terms of our expenses. So when you're counting your expenses, you have to make sure that you are not omitting the healthcare expenses or the premium expenses. And on top of that, if you're years away from your retirement or a target retirement age, then make sure that you're adding inflation, because keep in mind that the premium inflation goes higher than the regular inflation or the lifestyle inflation. So have a look at the past data. Again, the past data may not give you a future guarantee, but at least it will give you a view that how your premium may increase year on year and how much you have to plan. And keep in mind, with the age, the premium also goes up. The next point is that have an emergency fund. And as we keep saying in most of our videos, everybody should have an emergency fund, which could range from 6 months of your expenses to somewhere around 24 months of your expenses. Because once that medical uncertain expenses hit, you may need money in cash, and that's the worst time to cash out your investments, because the markets may be up or down. You don't want to do so. Emergency fund definitely plays a big role there. And the last is that maybe in addition to emergency fund, have a sinking fund. And the sinking fund is that you say that this is the money that you've written off from your portfolio. It's certain percentage, a very small percentage, but a certain percentage of your portfolio. Or you can even bottom up calculate for you and your family that this is the money that you will need for your future needs of any medical expenses over and above what the insurance pays, because this will help you not derail your plans in future. Yes, it does add up to all those monies to make the financial target even tougher to achieve, but it's better to work one more year or 2 more years to have those sinking funds, emergency fund as part of your portfolio, rather than have that be sorry later. So I hope this understanding of these different stages of healthcare that we go through, how the insurance companies see these healthcare stages, and how they give you the packages, how we've tuned our healthcare, and what are the considerations you do, gives you a good insight, and it gives you some new food for thought. As always, would look forward to your thoughts, comments, suggestions, etc., especially towards our plan, because we would love to learn from you. Till the next topic, till the next video, and till the next location, goodbye from me. Bye bye.